Good morning. Casey, are you there? I think it's you, right? Who's in already? If not, my apologies. Casey's always, also, most of the times, here very early. How's everyone doing? Oh, okay. Let's see. So I just want to make clear that upon community request, I've had a lot of people asking me to get into gold. So, but only if there's interest. So I don't know for sure if in London there is any interest. If there's no interest, I won't do it. But I'm just trying out, listening to the community what they want. So you guys have to just let me know if that is something. Otherwise, we're just going to focus on the NQ because um, there was said that London is not that advantageous for gold, but if anybody wants to do some analysis, maybe for the AM PM session later on, that's all fine. But yeah, you guys just let me know. Otherwise, it's just going to be NQ. It's just we'll see what you guys want. Obviously, NQ will be the main focus. And we're still building the 2 a.m. model, so I'm still working on that. For some reason, every day we have been into the consolidation area around 2 a.m. and then you see that later in the day, price goes back to it, right? So I think it's quite interesting to see the full circle. Like it's a start. So when you have a lot of consolidation, it's like if you have a market maker buy or sell model, price always goes back to the original consolidation. And we have the higher time frame analysis, but even in one leg up on a higher time frame, you have multiple market maker sell and buy models because a retracement is the opposite model. It's just a tiny market maker buy model, right? So I'm just wondering if it's quite interesting to see if it's not when we are in consolidation during that time. So let's say the 150 to 210 model. I'm seeing some things that are like, okay, that's very interesting. This week. So a lot of the times price did trade back into it in the PM or even in the I think most of the time was the PM session. So still tracking it, still monitoring it, and yeah, at some point there will be a model. And I want it to be, if it's not a model, if it's just too little of a range during the London session, I might make it I might extend to different time frames to build models and not only look at the 2 a.m. But I am thinking of doing something with this because I really think there's something there that is sort of like sets a stage and you can get some knowledge for future moves. And it just seems to me that it's just sort of like really creating a base which is easy identifiable. Let me put it that way. So still ongoing, but yeah, let me know, guys. If there's anyone, if it's just if there's no gold people here, I'm just gonna focus on NQ. And if there's people that are interested in gold, let me know because I've just started because I haven't traded gold yet. It's for me also like I can go into the analysis because that's not really, if you can do analysis on one instrument, you can do analysis on the other one. But trading it, to be honest, I really like with NQ, if I put my real money on, I really need to know. Like I have to have more data myself, what models work, because some things obviously are always different in instruments, right? Some levels read a little bit different, most likely. But hey, I'm going to paper trade on gold at some point, and then at some point it will be there will be live money on it. So yeah, and it was a nice move down yesterday. I saw that on gold, so it's interesting though. There might be good moves to catch. But anyway, NQ. We are on NQ right now. And let me know, guys, if there's anyone who is in gold, just let me know. Or anything. I mean, there's also other things that I could go over if there's any interest in that. So just make it as valuable as possible during these sessions. And obviously, we can find a trade, we trade, right? So what I did, just on the 15-minute, I just want to calculate the range to see how far did we go up We did go to the 79% of this whole dealing range, right? If I take this whole top to the bottom yesterday, so yesterday we bottomed out here, and then calculate the move back up. We're already above the 79%. In all honesty, I am bullish for the rest of the week. It's only today, right? I think we're gonna close, go into the high, and maybe go back into the range, or we're just going to go to all-time highs again and just keep on moving. I marked the daily. Oh, this is. Oh, hold on. This is still gold. See, this I have to be careful with. I'm just going to use this screen. I'm going to go back to NQ. And Q looks like the gold looks like it's going to go back up again. It's just bouncing off a daily fair value gap. It might go into the range and then go maybe further down, but it's interesting. I like to. I mean, it's very clean, to be honest. If I look at the price action yesterday, it was the first time I really looked into it. It looked pretty clean. But anyway, so on NQ, this is the breaker that I was talking about, right? On the higher time frame, yesterday we bounced into it here, and we just consolidated in the breaker, and that is really something is hard that really messes. It's hard to trade because normally when you have a breaker and you get a retest, you want to see it, react from it and move away from it. Now we did get a move out after the market closed, as you can see, and now we are going back up, right? You can see clear structure. We're in the buy program again, clearly. You can see here change in state delivery, and we're on the way up. This is just a small retracement again, and it looks very, very bullish to me. But then again, yes, we want to find a trade. We do have a small fair value gap here that hasn't been retested, but then again, it doesn't need to. Sometimes it just, it's in a hurry to go to a higher time frame PD array. Now, what would the higher time frame PD array be at the moment? Okay, what does liquidity do? We go from internal liquidity to external, right? So here you have an internal liquidity grab in a fair value gap right over here. So the next thing is that we would go to an external. External is anything that is, well, let's go to the 4 hour just to make it a little bit more. So for me, this would be even if it would take this high out, Thursday 2 a.m. Is that already? I just have to think. We're not in. I'm always confusing because the daily open is at 6. Yeah, so this is yesterday's really. So you have to sometimes remember that we start the day officially on 6 p.m., right? So the date is actually sooner, but that still counts as a liquidity grab of the previous day, even though Thursday 9 October 2. Yeah, okay, this one. So this high for me is like a point of interest now. Is this the high? Well, this is actually the high. Yeah, this is Thursday's high here. So it could go into this high here and then reject here, which for me is already a good enough for an external liquidity grab. So it could reject from here, but this is enough for me. And then you have to reassess again, right? Because you went on the 4 hour from internal to external. Now, what does it do again? It goes back to internal. But sometimes it continues, right? So it takes this one, but then it's just might have a minor retracement, and then it goes for this high before it goes back into for. So that's something. So this area is for me a moment where I have to reassess again. How is it reacting there, and are we going to continue to the all-time highs again? Which you see happen a lot. So I'm going to grade this. Now, I do want to point out we have been rejecting already in this rejection block. So it can just go blast through it, right? So as you can see, we're already at one candle here, another candle here. So it was already here and it rejected and it went into the range. So it could have been, it could already has functioned enough as a rejection block. So I am going to grade it. Let me just do that. And let's see what the levels have been used. That gives us a lot of information, right? Now you see that this candle bounced around between 75 and the 1/3, and this one bounces between the 66. Now what I noticed in my journaling, and I think if the people have been here with me a little bit, I've said that a few times before. If I see that a level is not hit exactly, there is a high probability that it will go to a level, like in this example, maybe the 0.5 and hit it exactly. So there might be one little retracement back down, but hey, that is just something that I noticed in my journaling. Like, okay, like it's not done. It's like unfinished business. But that's just because it didn't hit it exactly. But I can't say it with certainty yet, but I just, just something I want to share. If you go into your own journals and watch these levels and figure out if there's something there. Yeah. On the other hand, what I did notice a lot of the times that when it does hit a 1/3 level, it goes down a lot. I think we had that a few times in London as well. And then I thought, oh, it's going to go to 0.5, but then the 1/3 was just enough for the level to really make a move to the downside. So yeah, so mark those 1/3 levels as well. ICT only uses quarter levels, but I started using the 1/3, and I noticed that there's a lot of value in them as they are used quite a bit. Yes, let me put it that way. So yeah. Well, anyway, let's keep these on here. We can see this is already balanced out, right? We have no more imbalances here. This wick here, this overlaps this one already. So I think this 4-hour candle, we're almost at 2 o'clock, guys. So that's why I want to come earlier. Let's see what the next candle does. It looks very bullish to me. Then again, we could go into this wick a little bit and then go back up, but let's see. Yeah, let's go to the lower time frame here. Almost 2 o'clock. I'm gonna mark my 110, 150. Yeah, this was actually a trade here, an entry, 153, and then yeah, this is a good trade over into the macro. Yeah, this was a trade here. You can see there's a breaker here, right? Let's go to the 5. On the 5, you can see clearly the structure. Breaker, retest, and this exactly in the start of the macro, and then it's a long. It's a very bullish setup, this area here. You see, this is a beautiful, again, now we're seeing a little bit more of the normal structure repeating, getting back to it. Breaker, retest exactly in the start of the macro. So this is a this looks like a continuation macro. So that means we are most likely going up. This will be in the trade. I don't want to enter now anymore because we've got a fair value gap here. This would have been the trade here. Long position. You enter right here in the retest, boom. You can frame a 2R trade right over here. It's a little bit, if you enter here, it's a little bit less because the better trade would be the inversion, right? If you trade the inversion here. You look at this inversion. You've got your change. You look at this candle here, and you've got a retest here. You get in here, which is just below the breaker a little bit. So it's when you're a little bit more advanced. You want to trade. You know, you want to get in one step earlier, and then you trade it up to here, and then you've got your 2R trade. There you go. This is a very safe trade. Yeah. I just missed it, but it's okay. Now, because the macro was already running sooner, you always have to be careful around this area. It's 3 minutes past 2. Could be the end of the macro. Because it's already running right here from this inversion right over here. Beautiful move. Okay. You see how it's. I don't mind missing a move like this because it sets the stage for a good move later on. As you can see, I'm not really. If I miss a move like that, I don't get any FOMO or stuff like that because it's just one move. And if things move, so if I see that we get clear, if price action looks very clean, it just gets me more excited for other moves because this is just one move. But you know, you can already tell from London session how things are moving. Let's see how it reacts in this area. I just want to see because this is fine. This is the first clean move we are getting again in the 2 a.m. Session. I don't know if you realize that the whole week almost it has been just consolidation and it just hardly moved, right? So this is a beautiful move in the 2 a.m. session. Like it. I love it. So nice and clean. We've got distribution. It's a good, you know, a little bit of a large candle here. So it most likely will keep on running until 8 past. So even though you said you have one candle going down now, most likely it will go maybe into this wick here and maybe tap the 75%. Let's see. So that will it run another 20 points in the macro? Let's see if we can do another 20 points in the macro. Or is it done? Because we do have a suspension block here. You see that? Now ICT always said suspension blocks are blocks, and I believe I'm still working on them. I'm also studying the suspension blocks, by the way. If it's the final at the end of a move, if you have a market maker buy or sell model, I'm wondering if they are the end of let me mark it. I didn't see it before, so my bad. Let's see if it goes through it. Or is it the end of the move? Because then if we can identify that we have we know then they stall let's see. We're in a macro and we hit a suspension block now. Let's see what it is. I'm gonna mark I will mark them because I've got my volume imbalances yellow. So I'll do the suspension block yellow because we've got, it's like two volume imbalances on both sides, right? That's a suspension block as per ICT's first initial introduction to it. He still needs to go into it a little bit more, he said. So it's just, we're just figuring out along the way and trying to see if we can find some logic in the suspension block before he even goes into it. But I can't wait for more information on them because I think they're very valuable. Look, here we go. So we're at the 8 past the 2 o'clock. Like I said before, if you have a macro running, always be careful around the 3 past the hour and about 8 past the hour, because if you have if the move is already started during the macro and you've got quite a bit of a move, it might not use the whole macro for the whole move. But then again, we also had this retest of this breaker here in the macro. So a lot of the times you see, well, the retest was actually a 145. Remember that I said sometimes you can extend the macros 5 minutes before and 5 minutes after. So, and this is interesting here because you got a retest here already at 145, 143, 144 it is actually exactly. But I guess the suspension block is holding the move now, has halted the move, I guess. Let's see what happens. Let's see if it blasts through it and uses another 5 minutes to go to the upside. No. Interesting. Oh, we are going up. Okay. So we just started a new 4-hour candle, right? Because it's 2 a.m. So now what I always watch for, so this is the 10 p.m. 4-hour candle. Now where did it open? Did we open below the close of the previous candle, or did we open above the close? That's very important knowledge always. So we had let's see, the close here was, so the suspension block is working, guys. So let's put it this way now. If I would have had a trade from here and you just want a quick scalp, and look exactly at the macro end as well. Beautiful. This is really a beautiful trade, to be honest. Retest. Let me again go into I want to calculate I guess this will be a part of my suspension blocks. I will incorporate them here. It's a little bit higher than the initial fair value gap that I okay, so let's see if I see the retest of this bullish breaker. In market order in, I would put my stop below this wick, I guess, but maybe a little, yeah. Because the retest is the retest, right? But sometimes it does go a little bit lower into the wick again. So normally I would put it here. It's a 1.84. But let's put it a little bit higher because this is the inversion here. Yeah, this is fine here, 2.31. I don't think you have to put the stop here actually. Let's go to the 5. I think it's it's not necessary to put it there, although the breaker is a little bit larger, but I'm just looking at this breaker here, and there is a fair value gap. But you can see this is a breakaway gap now. So price in a hurry. Um, let's see if this is the breakaway and this is the measuring gap. Let's just see. Do we have the range? Can we calculate the full range for now? 366. Oh, look at that. Exactly 0.66. Okay, so this is this will be my target for now. Can you see it? That yeah, I'm getting into I'm going to frame a trade now because this looks pretty juicy to me. 366 is lining up exactly with this line here. Yeah. I think this is the range here to 366. That's what time is it? 15. Let's see if it's going to run there now or it needs one retracement before going there. It's 15 now, so remember, even though the macro would run 5 minutes later, it could be the end of it for now, right? Because it needs a little bit of a rest after a move like that. But it could also just spike up. It looks very bullish, right? This price actually. If you have a runner, I think it's safe to leave it to 366-ish. Yeah. Come on, what are you doing? And Q, you're gonna run. Just keep on going up. I'm in with micro, to be honest. Just look at the 4 hour. Yeah, we might reject here though. Let's see if it goes over. This would be my around this area has my interest 066. Also, if I calculate what it's a confluence. Why? It's this level here. But if this is a breakaway gap on the 5 minute, let me go back again. If this is a break because there's no retest, this is the measuring gap. And this is exactly the half point of it. And it matches exactly with the 0.66 level. But let's see what price is doing. It's the end of the macro, right? So we moved all the way to 15. So you see here, you can extend the macro sometimes 5 minutes after. So the suspension block, I guess, was just little, you can see it retraced a little bit from there, but it did not really, it's above it now, so it's not really holding it back. But it's just sort of like little breather here, I guess, so to speak. Interesting. Hey Methorzy, how are you doing? How's it going? Good morning to you. It's a good morning here. We finally have some sun and better temperatures and things like that. So have you been trading already? Hey Dolly, what are you doing? So I'm really happy with the you're from Germany, right? So when I used to live in the Netherlands, autumn really made me depressed sometimes with the gray weather because we don't have it's a lot of rain, wind. Good autumn is nice when you have, the nice weather, even though it's colder and the beautiful colors of the leaves. I'm just thinking of getting into a trade again, but let me see. We have a start of a new 4-hour here, and hey, I'm very bullish. Hey, Richard, how are you? Oh, you're driving and you're even listening to me. That's an honor. Wow. Driving and listening to me. I guess that's a big compliment. No worries. I'll try to make it as valuable then and make sure that you don't get an accident when you're driving. Mm, Seems like I'm late for the train. Yeah, no, listen, I didn't take it as well. I was talking about gold and that if people wanted, because during the PM session, there's a lot of people asking for gold. So I just sort of like, I'm going to be full transparent, like, hey, analysis, I don't trade gold yet, but I'm starting with analysis. So if people want it, I can go over it. But then because we've been just consolidating lately only with this same time, right? And every time there was not really an interesting trade. So I was sort of like, oh yeah, we know now, 2 a.m., nothing doing. And like, oh shit, I think while I'm talking, it presented a very good opportunity. And look, let me just go back. Okay, the first opportunity is when you play the inversion, right? Then you have the retest here, but I wouldn't play that right now, considering how the market has been behaving. But then, if I would go to the 5-minute again, look at the retest right in the macro, right here. Look, so we have the breaker here. Let's do the breaker retest trade because this is one of the safest trades you can learn. Like you have the breaker here in the 5-minute, right here. Let me make it exactly a little bit so we have the exact top. And you see when the macro started at 150, exactly the retest here, that would have been like, remember yesterday when we had the retest in that 1-hour breaker, we saw 3 1-hour candles going back and forth, back and forth. That is not the retest that you were looking for. Then it's just not really, favorable. But this is the retest you want. Here, boom, and then it goes out of it. So I missed this. It was exactly at 150. And what you see here, it's leaving this area without a retest. So this would be the unicorn. But if price is in a hurry to get to a certain level, it's leaving it, and then this becomes a breakaway gap, right? So what this becomes the measuring gap, and the measuring gap is the half between the one bottom of the dealing range until the top of the dealing range. So what I did, I calculated, and okay, if that's the dealing range here, let me calculate the. Did I do it correctly? Let me see. 389. Okay. Now the only thing I'm always struggling with is it I think it's the beginning of the if it's bullish you have to take the beginning of the, and if it's bearish, you take the top. So look where this matches up with 0.69, with half, almost half here. Okay. Well, let's see. Let's see if we can find some. Yeah, but it's okay. You know what, Meteor? I think if I see this price action, I just get very happy because the market seems to be moving already nicely. And if you see this move already, these were the moves that I saw in the first week when I started looking into this 2 a.m. 150 210 macro continuation moves, right? So hey, listen, we just started the 4 hour, so let's see if we go into this wick and then go back further. I'm very bullish, aren't you? We're just warming up, having coffee, and just seeing what price is doing, and we'll catch a good move. We'll catch a nice long move. Hey, we don't care about this little move, to be honest. Mm. It's nice to get them. Oh, and by the way, this was a suspension block, so I marked it. I saw it, and on the 1 minute, so that's why I marked it right over here. But price did go over it. It's sort of like, had a breather here. So here you have the suspension. Then you see price go into it at 205, 5+2, and then had a little bit of breathe and then goes over it. But I saw on the 5 minute, did I not see another suspension block? Does it count as a suspension when you have a lot of air here? I guess not, right? No. So, but see on the 5 minute, if you look at the 5 minute, the body stay within that 1 minute suspension block, right? You see it, so you have to really scroll through times to see if you're being manipulated or not. I find it very interesting. Let's see on the 3 minute if there's a better option. Oh yeah, look at that. Oh, we found it. We found a better option here. So look at, this is a suspension block as well. Yes, I think so. We have a little gap here. Okay, okay. Okay, and Q will move you. It's a very tiny one. Yeah, look at this one here. So then on the 3 minute, is it, I need to double check. Even with glasses, I can't see if there's a gap or not. It looks like it's overlapping or not. Do we have one little gap? Yes, we do have a little gap here. The open is 350 and the close is, where are you? The close 351.75. Yes, so there is a little gap here. Okay, so that's perfect. We took the levels I wanted to have yesterday. The 4 hour was nice and now taking the Asian low. So yeah, we think we're ready for more bullish. Yeah, I definitely think we are ready for, but you see, hey, the 3 minute suspension block is much how that worked. So we get a wick over it and we went into a 25. Sometimes I don't know what I'm grading. But yeah, I'll show you again on the higher time frame. Why? This is 4 hour. So we like we have a retest here of this lower time frame breaker. This is a 4 hour breaker structure, right? You have a retest here, another retest, and we entered as a buy model. We are in the buy program now. We're clearly in a buy model until we're not. But this is clearly breaker. This is a unicorn on the higher time frame on the 4 hour, right? You see that retest, and this is then we get out of it, and yeah, and now we're here. So this was Asia, I guess. Well, no, we were already here. Asia is accumulation. We're getting a manipulation move to the down. So this is how I see structure. Asia is accumulation, then London will be perhaps the manipulation, and then we get the distribution. Or we're just going to go up now, and then we're going to go down for all day. Did we take out a high again? Yes, we did, right? Or not? No, not yet. We're near all-time highs again, guys. Again. This could be an accumulation zone. You see, even though it's a market maker sell buy model right here, and we're at the end of it, we could enter some accumulation, because if you look at the 4-hour candle here, let me show you, because we do need some consolidation. Yes, what are you doing? We do need some consolidation before we get a manipulation distribution. So look here. You look to the left, right? What do you see? 1, 2, 3 candles. Now, normally when you look to the left, you can also expect the same thing to your right. So we're actually just in the first one. So I wouldn't be surprised if we get two, at least one. The 2 to 6 might be a consolidation candle now, because we did have a sort of a move, and it might now sort of like fuzz out and give us one of these candles that, like exactly you see on the left. So price always mimics the other side, right? So if you do see that on the other side, you have to be prepared a little bit. So yeah, so we might get a consolidation area now. And the range has been formed in Asia for like this range that we have, you know. So let's see the start of the market maker model at 10ish. And now we are back. We have the range until this low here, and yeah, we could just hang out in this area for a while before making the move up. So yeah, so we are on our way to external liquidity, right? Because Mether, something that I wanted to point out on the 4-hour, we took internal liquidity on the 4-hour. Now where will be external liquidity? This would be the first one. So yesterday's high is here, and obviously here. Now the question is this a rejection block, or has it already functioned enough as a rejection block, right? Because we went into it here, went back into the range, we went into it here, back into the range, and now we're bouncing again in the area here. So let's see. I'm going to keep these on here. Now, so for me, it's like, yeah, we're on our way to external liquidity for sure on the 4-hour. But then again, if I'm thinking about the 4-hour, could we get a candle that does not do it yet, right? Because it's a 4-hour candle, and I'm looking at the 4-hour that took the liquidity. So this has 1, 2, 2 candles, and then a third one, 1, 2, 3, 4. So let's see if it's gonna do it now, or do we have to wait until the 6-hour starts? I'm not making the same mistake like overlooking the 1-hour like I did this week. Just saying, guys, I make that mistake once this week. That cost me. That was very stupid to do. So yeah, so that's my only concern about this price action, especially when this looks so easy, right? This is trend line liquidity, just a nice, just very, move to. You can see they're very beautifully done to the downside, and they look very is semantic a good word to put it that way? But I've noticed when we have this structure, it it isn't, it looks very low resistance, but it's not. It just takes its time to go back and forth. Why? Because you've got all these wicks here. Everything again is a rejection block. Here goes into it, rejects down. Then it goes a little bit higher. But hey, what do I see here? My favorite flat top with a wick. I get very excited when I see those. Oh, look at here as well. We've got a flat bottom here as well. Now, I don't get excited when I see two of them because then I don't know which side we're going to go. But this is a perfect scenario, guys. Flat bottom, a devil's mark, means lack of manipulation on that candle, and it will have a wick through it on a later stage. And a wick through it is pretty awesome because why? If you have a wick next to it, this will function as a rejection block. So you can literally frame a trade from this area to the opposite side. Because in my journaling, what I've seen, it works as a magnet, and you sort of can frame it's a double function of structure, of a specific structure. So now you have two candles that work together, and it's a very important algorithmic signature, so to speak. And it's funny for me that I never really, I started noticing it when I started journaling, like, oh, okay, what are those wicks? But at some point I got very interested in the rejection block because I thought, okay, if a rejection block, why isn't price going to that liquidity, right? Why is it always stopping, and why am I not getting my full TP? So that's how I got interested, and I started really, studying the rejection block, and that's how I started noticing, hey, on the higher time frame, these flat bottom, flat tops working together. And I'm like, oh, okay, how did I not see that before? They are there all the time. And once I start noticing them, I'm like, okay, that's very valuable because now once it gets to that point, the wick has another function than just liquidity. Then the bottom doesn't become liquidity straight away. It's like a process. It needs to work through certain stages. So yeah, so that's why I love wicks now. For me, wicks are a present because now also ICT gave us a lot of information the last few weeks how to use those premium and discount wicks on the higher time frame. So yeah, wicks are we love wicks now. Wicks are giving valuable information. So let's see now if we are going to this flat bottom, could be, right? So that means then this is not if we get into this level, this is not a breakaway gap then. Yes, and on the 4 hour, they're the most powerful ones. I just really get really excited when I see the structure with a wick and a flat top or flat bottom. But on the 4 hour, I don't see that structure in the close vicinity. Can you check? Okay, well, this was. Oh, we did have. Oh, this was a future. Remember, we pointed out this level for later because this was a breaker with a unicorn. So you go here. There you go. Yeah, you were touched. So I'm gonna get rid of this one. This one was already. This got, retested here. Oh, look at that move down to the downside. Wow, am I miss? Beautiful. This is taking a lot of people off guards, right? I mean, that's why I'm not you can see that I'm not eager to enter. Because of the high manipulation, I'm sort of like, okay, I don't trust anything anymore at the moment. I really need to see more proof that we are what time is it? 2:37. That's a nice move. Did anyone catch it? Did anyone see it coming? I did not, in all honesty. Let's see. The only thing that I am thinking about is like, okay, it's not ready to take out the high yet. So because of if I look at the candles here, I'm like, okay, we're going to get some I'm prepared for consolidation. But did I miss some valuable information like accumulation, manipulation, distribution? No, I don't think so. I think we're going to go into consolidation. Or are we going to go? Did we take external? We didn't take any external liquidity, did we? We took internal here. We're on our way up, but we didn't take. No, it's just it's just more. It's just going to futz around in this area. This is the consolidation area that we're just moving into, and it looks like it's going to go for a large move to the downside. But now it's catching people off short, right? You see that? So now it's fooling people to go short. Now we're not falling into this trap. We don't fall. We are. But on the other hand, it finalized the market maker buy model, right? If you look here, we have a market maker sell side, buy side. We went into this 3-minute suspension block, and we only wicked above it. So could we go lower from here? Would have that been a short? I don't trust it, guys. I'm still bullish. So if I'm bullish and price goes to the downside, I just don't trust it. I'm not gonna. You see how fast it goes back to the upside again? It just. Wow, you see that? I wonder how many people got FOMO and shorted in. If you hear a ping pong ball, that's one of my cats playing around with a ping pong ball. She just loves those things and she just goes mad from them. Okay. Yeah. You see again, it does not, the wicks go through that breaker, but no bodies, right? The bodies go straight above the midpoint. So I'm actually thinking, hey, come here, puppy. Come here, yeah. Oh, you're so cute. Let me just throw it. She wants me to throw the ball. Yeah. They're like, oh my god, are you behind the computer again? Yeah, no, this is actually more bullish than this is actually maybe even turtle soup. Thinking of well, it's 241, but you see how this is a manipulation move, and if you already defined the 4 hour, and like I said, I'm preparing for a consolidation. It doesn't take you by surprise this move because it just uses this range because this range has now been defined. And now we can expect some consolidation between 2 and 6. It might take it out at the end maybe, but I am expecting consolidation in this area now. Why? Because I always look to the left, and you see I'm on the 4 hour here, right? And I see 1, 2, and then the third one moved away. So yeah, I'm just yeah, so I wouldn't be surprised if we get one candle here as well. That happens a lot, guys. If you look you always look on to the other side, and price action does mimic most of the times the other side, especially in the market maker buy and sell model. So And you know what? If it's going to go take out the liquidity, it will make it hard because they know people are watching it, so they'll try to fake people out of their positions. Um, so yeah, it's going to use this range that's been defined in Asia um, for the consolidation now. So now the only thing is if you want to trade it and you can define like the top and bottom of the if you watch it at some point you can see some logic to it. If you want to trade ranges, then yeah, let's go into it. I mean, let's try to see if we can find any scalp methods in this area, if we need to do so. If anyone wants me to go over, I put it on um, on my thumbnail and in the description as well because on community request, gold is in high demand. Well, obviously it went down yesterday, but people are very interested in gold analysis as well. And I have not traded gold yet, but I'm interested to do analysis on it and start dipping my toes in it and just start paper trading it. So if anyone is interested in for me to go over gold, just let me know because I think London might not be that interesting for a lot of people for gold, but maybe they want to have some analysis for the day, for when the AM session or pre-market starts. Just let me know. But if not, I'm just going to focus in London on NQ. But if anyone in the chat or who's here does have interest in it, I will do so. But you need to let me know. Just let me know, and then we'll do so. It's hey, I'm here for you guys. Yes. So anyway, let's get back. I'll go back in the 1 minute. But that was a nasty move, right? You can really get caught a bit in a nasty way if you are um, um, believing the move to the downside. Now, could it set the stage for a silver bullet the for the session? I don't, I'm still. I would be really surprised if we get a large move down, to be honest. But hey, it could. I could be totally wrong on my analysis. So I'm still bullish, to be honest. Because why? Because we took internal liquidity here, and I don't think we took external liquidity yet on the 4 hours. So I do believe we first need to take external liquidity, but it's going to take its time because everyone knows that these highs are here, and if you know that price goes from internal to external, and they know that's being taught, they're not going to make it easy to get to that external liquidity, right? But you see here again, like how it's just not going. This was just a fake out. This move, a fake out. I think a lot of people got excited from that, and now people think I do. I mean, I think a lot of people now are short buys because of this move, but I'm not. I'm still not. I'm still bullish until we take out the higher time frame, the PD array. So I'm prepared for some consolidation. Hey Kang, well, I had a long time that I wasn't profitable. I started like most people in retail penny stocks and doing some. Then I got the penny stocks was really ridiculous. But then I started to have a few other mentors, which were actually they were okay, but they didn't make me profitable because it was still retail logic, but a little bit better than the penny stock things that I started with. And I did volume profile TPO, which made sense to me. And TPO was already time based, so it already made me look better into the in the trading style and market profile. So I did start to learn some basics, but I was still like there was something missing, and I wasn't profitable at that moment. But I did start to do evaluations and stuff like that until I found ICT, and that is about 3 years ago now. And that's where I started. So that's where I started to become. That was then I could combine, like say the better knowledge that I had, the volume profile, TPO knowledge, and I was like, okay, now I can now the missing link that I that I had with those concepts, I could find in ICT. So, but if I would have started with ICC straight away, I would have done. I didn't need that other stuff, but it did help me a little bit. But ICT was for me the reason why I started to really understand the market and see the logic behind pricing. But it was just a building block for me. And then I added more time to it, and I did have other mentors that went more into the time concept. So I blended few things from different mentors into my own, and that's now how I made my own. I guess it's building blocks from every mentor that I had, and so. But yeah, I mean, if really, an ICT is free on YouTube. So yes, technically the part that made me profitable, if I can, I'm not afraid to say that if you want to be profitable, I think ICT is enough, and it's for free. It is for free on YouTube. And I think streamers like myself, I'm still I mean, I have some technical knowledge, but I'm still, looking for improving executions and getting more knowledge. But because I have already 3 years of studying extensively, I can help people maybe speed up the learning curve a little bit and go make things more practical, like showing how I use it or how I see it. And I believe that everything, you don't want to copy someone completely, but just take some things from different people and build your own little, your way of trading. I think that's important because just copying one person is just not. I don't think that works that way because we all see things a little bit different, and you just have to take what works for you best from multiple people. And if someone has more things that you like, you can, use that. But yeah, don't limit yourself. Let me put it that way. I think it's good to have to look around, to have different mentors. At some point, you learn one thing and then you move on, maybe to have different views because you don't want to get tunnel vision on one view. So that's how I see it. So I'm still, looking around as well. Like, hey, what does that person do, and why are they looking at the market that way? How, is it something that works for me? So, yeah. So that's a very good question. Or have a mentor. Yeah. So, I did have multiple mentors, and it's funny. At some point, you start fading them. Like they have a analysis, and that's the moment you are realizing that you're starting to grow, and then you're like, hey, I see it differently, and then you see that your trade is correct, and that's really awesome. But that's good. That's what you want to see, and you want to have mentors that want you to get there. That's very important. That they don't care if you are doing, you have a better trade than they have because you are learning something. So that's very important. So how long did it take me to yeah, so how long did it take me? So if I would push out, if I wouldn't have had the other things that I did, I think I could have been profitable with ICT within 1.5 years of studying him. I think that would have been enough. But then, you study extensively, and and then it's still like a growing curve, right? It's not like, oh, you are suddenly profitable and you're there. Then you have a little bit of a fallback. You get cocky. You're like, oh my god, I have like 3 payouts and I'm really good, and then you get humbled. It works like it really is. It's like a growing. It's like, and everybody thinks, oh, it doesn't. I'm not greedy. It doesn't affect me. Listen, the brain works in a very peculiar way. Hey, listen, guys, we're going down, but let's see. I'm not in a short because I'm. Let's see if the daily open here. This area is going to be. It's also the my brain. I need more coffee. The settlement price. So I have that automated from the previous day close price. You can automate that in TradingView. And if you see it, it always, like, if it matches up with the daily open, it's a very nice, it's a good area of where price can be drawn to, because literally it's two places where there is a lot of liquidity. Now the daily open, obviously, with the settlement price is close to each other because it's just 4:15 and the daily open is at 6 p.m. So it's just a few hours. But if they're so close to each other, they have meaning. I take good entries, but always exit before hitting TP, and that kills my profitability. Yeah, that is because your model, I think that always has to do with that you don't know the exact TP, or your model it doesn't incorporate the a mechanical stop loss and take profit. For example, if you would start like very easy, if you would just start with, if you're still building a model and you're not there yet, but you do have like one specific, like for example, when I started to get profitable, I just used the breaker, for example. And if you start backtesting the breaker, and if you have the proper entry, you can always take a 2R trade, for example. I was just going over that here. So you want it to be as mechanical as it can be. So you have a stop loss, and if you're stopped out and you have your structure is there, it happens. It's okay. It doesn't matter, right? But for example, this trade here, this is a breaker. Let's say, let me highlight it. This is the breaker here, right? These candles here on the 1 minute. Now you have a retest here, exactly in the 150. This is the macro time. So I'm building a model right now. I'm busy in the process of building the 150 to 210 model, and I might change it to the London setup, because it might not only include this time, because I think they work in conjunction with each other. But just for example, here you have a retest during this macro, so this would be a perfect entry. You see a retest here, you get in. For example, long position, boom. Now, I already had this suspension block marked on the 3 minute. Now, that is something that ICT just introduced, right? But initially I said, well, let's see if you have this, the macro is running, so you can trust the time. So time is important in this case, right? So that's why you want to trade within the macros. So let's say here, you enter on the breaker. Now, technically, we would say you need to be in the breaker. Price could go down all the way, but makes it hard to make a 2R trade in this situation, right? Because it just it's not even a 1R trade. Now, what do you do in a situation like this? Because this is a solid trade. You can see already, like, hey, it moves away from it. Now, what I would do in this situation, you see this wick here? This is a little wick here. I would just do it. Okay, I'm gonna give you a gem here. You see this wick here and this area here. This is, if price would hit down into it, this would be a balanced price range, right? Or it's like it just doesn't go lower. So I will put my stop not below the midpoint here. Let's say just below the gap here. And in this case, you just use the time of the macro. Here you just go to 210. Let's see if that makes a 2R. It's still not a 2R trade. Yeah, this one is hard. But hey, sometimes you take a 1R trade, but you prefer the 2R trades. But the breaker, this is just a macro trade. But if your stop would have been, yeah, you can also put the stop right below here. But technically, if you're starting out, I wouldn't do that. I wouldn't do that. You want a 2R trade. So, but the breaker retest, I'll see if I have more examples, because they usually provide 2R trades easily. This one is a little bit difficult. It doesn't really provide a 2R trade, but if you would have played the inversion, let me go to the 5 minute. This should be a 2R trade. Why is this not a 2R? I'm sort of like confused with this one here. It should be a 2R trade. Yeah. It is a 2R trade. Look, I'm doing something wrong. It's always a 2R trade. Yeah, here we go. Now look at the 5 minutes. I'm sorry, I need more coffee. It is a 5R trade, a 2R trade. Retest within the macro, boom. So the breaker is here, right? This is not a breaker until you have a price going through it. So you have 135, price goes through it. You don't do anything. You wait until the retest. Then you have this candle, boom, retested within the macro. You're already bullish. Why? Because you can see the structure of a market maker buy model, right? you have a sell side, and you already have an inversion that has been, the inversion already has been here. So you already missed the inversion, for example. So you already have confirmation, but because you missed that, but you see this inversion, that is your number one. If you have more experience, you enter in the retest of the inversion. So that's right over here. But if you start out, you do the breaker, because then you have the second confirmation for an entry. It's still a 2R trade, but you want to have less risk of a losing trade. But here you already see, okay, we already have an inversion right over here. Let me mark the inversion so you guys can see it. So at some point when you get more experience, you start to get this, let me mark the inversion in another color. I'll make it purple. Here you go. So the inversion is right over here, right? Let me get rid of this one here. So this is the inversion. So this is already your change in state of delivery. You have here a candle through, and you have already a retest here, right? So here you already, okay, you know, okay, we're getting bullish now, but you missed it. But then you look at the breaker. Okay, the breaker. Oh, it's still not a breaker, because if you're here, this is not a breaker yet, because there is no candle that had closed above it. But then you see this happen at 135. It's not a macro. It's fine. You let it go. But you're right. Okay, listen, the breaker is here. Now let's see. I want to retest. I'm only going to enter at a retest of a breaker, and I want a 2R trade. Now, you're at exactly 150. It retested the breaker. Now, what you do, you can just market order. You can put your limit order in, but you can also market order in. Now, if you would have market order in, let's say you put your limit order here, and then you put your stop loss just below the breaker, because what it invalidates, when is your trade invalidated? When it's not long anymore. When the breaker is not a breaker anymore. The bullish breaker is the, that's your springboard to higher points, to finalize the market maker buy model. And then you just take a 2R trade. You even go lower. You just make a 2R. Here you go. You're in the fair value gap. So that's how you get a 2R trade. And even though your stop is very safe, now when you see it runs away from you that fast, you already know, okay, price is in a hurry to get somewhere. You can already trill your stop loss very fast, right? Because you don't want to start, in this candle already, I mean, it's so bullish, you can just trill your stop very quickly to break even. Do not trill your stop too fast. That's how I lose a lot of my larger trades, because I trail too fast. So I'm working on that, because I trade distribution mainly, but if I trail it too fast, you get wicked, because that's what it does. You get wicked out too fast, and then you still have a winning trade, but it's not like your 5R trade or your 10R trade, which I am aiming for most of the time. That's why this doesn't really make me very interesting, to be honest. If I see this price action, like I said, I'm expecting consolidation now. So I don't get interested of this move, because for me it's like I'm not, it doesn't get me excited, because I'm always looking for more than 50 points to make in a trade. But the thing is, if I trill my stop too fast, it's like maybe a 1, and I get stopped out. It's maybe a 2R trade or a 1R trade, and I'm not interested in that, because my larger trades have obviously also more risk sometimes. So so sometimes it's better for me to just, I'm working on that. But this is how I started 2R trades, and I make it mechanically as possible, and I don't care that it runs further. It used this suspension block, a 3-minute suspension block, as the entrance. Let me spot, this is a 3-minute. I mark it here. ICT has gone over them. They're pretty solid to use. As you can see here, only the wick went over it. But this is a solid 2R trade. Now, if you are using the inversion already, if you start looking at this structure, you'll see it's always the same. You always have an inversion first, then the breaker gets activated, and then the move runs. At some point, you'll get to the point that you will start taking the inversion, the retest of the inversion, which is here. It is at 127. 130ish. Technically, we can say that we have runs, right, between, we have macros 10 to the 10 after, but we also have runs from 20 to 40 in the hour. Most of the time, those runs, they don't take out liquidity or balance out imbalance, they just start the initial run. So you can also start utilizing them. So if you see an inversion here, you can, if you put your risk here, you put your entry here, your risk is, you can really have a very low risk, right? Because how many points is that? Because you're closer to the swing point. So at some point you'll start doing that. That's where you want to get to. And then this trade becomes and you take the same trade. Now, why is it not working? Oh, anyway, you want to get to a point that you start taking it at the, but in the beginning, you just want extra confirmation. The most important thing is when you start trading, like, have confirmation first. It might give you a little bit less payout, but if you see the breaker get activated, and you wait for the retest, and you just go for 2R, that's it, and you just take it, and you're off. But you need to have a model like that, right? So the breaker retest is one of my favorites if you're struggling with that. But just see if you have good entries. Try to figure out why are you taking them to your profit too soon. So maybe you can improve your entries and your stop loss ratio, that they're still solid. And when you take it out before your TP, that means you don't have enough confidence in the trade yet. So you have to work on that. So that's basically the whole thing. You need more confidence, and confidence comes from journaling. Well, I don't like to back test myself. I forward test more because I have more. So what you see me do a lot during the session is that I put on paper trades, because that's how I improve my execution. Because I journal my paper trades just as if it's a normal trade, and I'm always here. Oh, Anthony, good for you. Yeah, no, I'm waiting for you guys to tell me what you want. So, Anthony, yeah, if you want me to go over gold, I will go over gold. And I had more requests. I never traded gold yet, so it's just analysis for me. So you guys, if I put on a trade, it will be a paper trade, but I'll just go over analysis. And it seems like we're going into consolidation anyway with NQ. So, let's go over gold, I guess. I want to make sure we are in consolidation. I don't want to, for the NQ people. Yeah, so I am expecting just this 4-hour candle to go into consolidation. But Anthony, tell me, are you do you trade gold? Is that the only thing you trade? Let me go. I'll keep an eye on NQ if we are GC. Now, I had a look yesterday at gold, and it looked pretty clean to me. It was quite, I mean, I never traded, like I said, but so what I noticed yesterday, that we have this daily fair value gap that I marked. Let me start on the higher time frame. Let me show you the daily fair value gap that I was looking at. So the question now is it going to go deeper into this daily fair value gap and go into the midpoint? Oh, I see I have to mark out the gap here. Is this a gap? Yes. Okay, so what you do when you have a fair value gap, but there's an imbalance, you have to add that in your fair value gap. So it's not the wick anymore, but you include the imbalance right over here. what I want to do with gold as well, according to ICT, yeah, I find gold. Yeah, I'm dipping my toes. So I'm really interested in starting with the analysis. So full transparency, I don't know the levels as well as I know NQ, but upon community requests, I'm like, you know what? I'm going to start analyzing it and just go over the process that I do with NQ. And in the meantime, I'm learning it as well. And if you guys have specific things that are maybe different, or you know, just like, oh, it works like that on gold, or um, you know, like for example, well, I already figured out from someone else that the open and the close are exactly the same, and so ICT always uses these wicks, right? So sometimes what you see happen on when you have a fair value gap and it goes through it, it stops right at it doesn't go through all the way, right? So I always mark these points if I use these wicks. Okay, if it would fall down right into this fair value gap to go further down, where is it going to go? Where will it stop? Because we have a lot of information in this wick, in this fair value gap as well. So we have to analyze that quickly because it's dropping now. Okay, let's go down to the 4 hour quickly because I see it's dropping. Anthony, tell me, how is London for gold? Because some people told me London session is not so good for gold. Is that true? Now this looks very bearish, right? 4 hour. Let me know, guys, how you find trading gold in London, because I've heard maybe it's wrong, but it's not correct. I just want to go to the higher time frame. You've got liquidity here. We've got liquidity here. It goes to consolidation in London session. So, okay, gotcha. Okay, it goes in well, it doesn't look like it now, does it? It looks like it's going to move. We had consolidation here. It looks like accumulation, manipulation. We have, it's a continuation move. I think it's going to go, we had, it had a retest already in Asia into this fair value gap. So I guess we're going to continue to the downside. Let me check some other things. Gold, where are you, gold? $39.37. Okay, I think I'm going to put a paper trade on, but 3937. I've got this level here. I think it's going to drop to. I don't have a good entry to frame now, to be honest, because it's already running, right? 3937. 3937. Is that a fib or what? Which you mean these purple lines on this screen? So I'm looking now for it goes. You mean these and this one here, the purple lines? So on the daily, I'll show you what I did. So ICT is teaching us now at the moment to grade these wicks. You see these wicks? Let me put it like so. Yeah, so ICT is teaching now that there's a lot of valuable information in those wicks that are on the left of a candle. So, but this one doesn't really, they don't really go a lot into the fair value gap. But what information that gives me, because if you only grade the fair value gap, you sometimes you want to know why doesn't it go all the way to the end of the fair value gap, and it sort of like stops, right? Or it either rejects from it goes back up before it makes a move down. So I always use quarter, one thirds, um, because I just noticed in my analysis that one third levels are very important as well. But I see here, I'm just looking at this 20, I'm just leaving it here because I'm just wanted to know if there's sensitivity here and this 25% of this wick, and then it might not go all the way down in the, and you see how funny it is, right? If you calculate this wick, the one third is exactly the bottom of the whole range. So I'm going to enter a paper trade, guys. It's a paper trade. Oh, hold on. I need to. Still not on. There we go. I will start trading micro gold at some point, but 3 ticks. I have a level. 3 6. Let me check again. 3 daily low. We already rejected there. Yeah, 3937-ish. 3937-ish. Just a paper trade. I love doing that because now it might be too early. 393. Now where would my stop loss be? I know it's a little bit ridiculous. I know this is I know that it's 100 points per trade, right? Three nine. I'll make it 340. This is my trade. Why? Okay, so two things. It's a midpoint as well, but it's also an extra confluence that I have there. But it might not. I don't know the times, how times run with the Mac with the, because sometimes I know with NQ, for example, we get in the run start at 20 to 40. So let's say I wouldn't be surprised we get a move up to midnight here and then we move back further down. I'm just gonna leave it. It's a paper trade. Yeah, it's $100 per point, right? So it's a lot of money if you're on the losing end of a trade. And so the micro, I'm more interested if I start with putting money on the line. I will trade micro gold first. And Anthony, you have to help me with something else. Do you use silver as a confluence to check SMT with on a gold, like we do with NQ ES? Do you use SMT as well when you make your analysis to see if there is any SMT? Because I use SMT a lot with NQ. Now, it might take a while to go to that level, though. It might, because as you said, it might go into consolidation in London because it did make a move in, it already moved quite significantly in Asia, right? Okay, let's quickly have a look at NQ. It's 317. My stop should just be over midnight, by the way. I should have a lower stop. It's just a paper trade, guys. People think I'm in gold with this kind of. I wouldn't put it on a trade like this in gold. I just think it's going to go to that level, but I might be wrong, a little bit too early in time. But I think it's sort of like in a distribution move at the moment, and let's see at 320 if it starts running at 320. It might go a little bit higher now first before going lower. Let's see. Yeah, it doesn't have anything. It doesn't need to go up here anymore because this is all balanced at the moment. The only imbalance that I see is right around midnight. So it could go up into this area a little bit. But we do have equal highs here. Ooh. Um, I'm just gonna wait 2 minutes. I just want to have a look at the how it's going to react at the 18, at the 20ish. Otherwise, I'm just gonna get out and re-enter at a later time because I think it's too early. I don't want it to cross this inversion here. I want it to stay below. That's going to be my stop. I'm going to reassess. If it goes over this inversion, I'm getting out. So this is now my stop. Just a paper trade. Just getting into the gold action. But this is a level that I think this is definitely is going to hit today. It might be in the pre-market or AM session. I think I'm going to be stopped out, but that's okay because it's just too early. Because we need a little bit of I guess consolidation, right, for the next move. Because look, it's made it the 4 hour, the daily. Let me go to the 4 hour. We already had a We already, yeah, it's just consolidating. We can see that, and then before it will make it move into this area. Okay, let me quickly check NQ again. Yeah, this is obviously, when you see structure like this, creating a double, almost equal low, you can already say, when you see this was not a smart entry for me. Why? If they create like equal lows, this you can equal this relative equal. It never takes out the equal lows in a very short time. When it creates for a reason. Most of the times in NQ, it takes about minimum hour before it gets back to those levels. So it's never like, oh, it creates them and then goes one little back up and then go down. No, it does not. And this is sort of like you can consider this also a balanced price. Well, yeah. So on the lower time frame, this is. Let me show you. Oh, I need to do here. Yeah. So this is a beautiful order block and also a rejection block here. So yeah, that's a very stupid entry, but it's good. Okay, no problem. And this red line that I use, that is the um, settlement price. So that's the 415 price. And you see beautifully how, I think if you want to trade this now, I think you can say this is your range on gold right now, right? If you want to trade, you go back and forth between these levels, the settlement price and the start of the, that's been, you can trade that all day yesterday, I guess. Pretty awesome to see. So it's using the daily open as well, very. Let me see the NWOGs. I put on the NWOGs and the NDOGs on this as well. 12. Let me put on the NDOGs because they might be. Okay. Okay. So you trade, I just wait for price action during my opening. Okay, gotcha. Yeah, so it's always good to get information, but when we have consolidation, you get manipulation and you get distribution. And that's my favorite part. And I guess then this is something you have to sit through now for maybe until pre-market. I hope that gold is very good in pre-market, so maybe it's even sooner than um, um, the New York opening, right? So let me quickly check NQ. Oh, and Q is also moving a little bit. Okay, I'm quickly gonna go back to NQ. Well, NQ is also, like I said, guys, we're just in that range, and I think that 4 hour candle is just going to stick for a while there. It's going to use that. Yeah, quickly go over. You see this 4 hour candle, like exactly. We are sort of like going a little bit lower, but is it really running? You can see definitely the price, the type of price action that we're getting. It's not really very. Is it nice to trade? Not really, is it? I mean, I don't like it. It doesn't have my interest. Um, Now let's wait for the 330 move. Now also here again, we have a bullish breaker. We do not want price action to go below this breaker on the 4 hour, but I could see things going into this breaker again to the midpoint and using this as a rejection block here, right? So it could go into this wick here, which is 180, 100 and let's say 25, 200-ish, 25, 200-ish. But then again, it would, then you would really break the bullish structure. We have a very bullish structure here. And even though we have this price action, it's still very bullish. It's a bullish structure, in my opinion. And we took out internal liquidity. And like I said before, it is on its way to get external liquidity, but it's taking its time. And external liquidity is either the high of yesterday, and this is the first high, and then we have this high here. So that's why I'm very interested in a high. But because it's so obvious, it's not going to do it easily, right? So it's just going to wait and stall. That is my just what I think they're going to do, and just going to make it very confusing for everyone. But if you look at the higher time frame, it's just consolidation for this 4 hour candle, because what it needs time to get to this level. It took internal liquidity already, so it's just it cannot do anything else and take external liquidity, and that's here and here. So it's just going to futz around and take people off guard and try to fool everyone. Um, so time distortion at its best. You see, this move caught everybody. Oh my God, we're going short, and everybody thought this is going to be a short now. You see how they caught up? And we called it here, right? We already said here, no, it's consolidation. We're not going to go anywhere because we already took the higher time frame. Internal liquidity, and it's on its way to higher time. So we already knew here we're not going short anywhere in NQ. We're not doing it. So we're just waiting until price gets better, right? And we just wait until. So for me, technically, because I'm a large distribution trader, I would actually wait in this situation. Like, okay, if I really see a clear, either it takes out the liquidity on the upside, and then I reassess. Like, okay, is this enough? This candle, because this is yesterday's for 4 hour candle, right? Or is it going all the way to this now? And are we going into price discovery? Or are we going, because it took external, are we going to take internal? Again, I think we're going higher. That's my just, but hey, I don't know. That's just a hunch that I have. Let me just have another look. Uh, 383. And remember, we could have a good TGIF today. Okay, gold is consolidating still, right, in that area. Yeah, okay, so nothing to really go over there now. Do we have any? We don't have any SMT with ES at the moment. But hey, NQ, I'm extremely bullish still. I'm extremely bullish, and I guess bearish on gold. I can say bearish on gold. So they're opposite now from each other. Yeah, I'm looking forward to also do some paper trading on gold and get to know gold better. Everybody that's been trading gold is so excited about gold. You know, it feels to me like when I started, I used to play tennis, and then I got a back injury and I couldn't play tennis. And I used to hate gold. I didn't, well, not really hate gold, but I didn't think much of it. And then every time when I spoke to people, oh, you need to get into golfing. I mean, you know, you can train your back and you can do that and blah, blah, blah. And I said, really? But everyone who told me that, they had this twinkle in their eye and they were so excited about it when they spoke about it. And I feel the same thing with people that are really, that trade gold. And it's like the same thing. They're like, you know what? Everybody that is doing it already, they know that it is, you know, it offers them good opportunities. And I mean, what I saw yesterday, it's clean. It looks very clean, the charts. So, but I can see the same excitement from like when people would tell me about the golfing, like with the gold. So it's just a deja vu, I guess. Anyway, it's off topic. Because you know, I mean, it doesn't work if I do something that I really don't like. I mean, that's the case. That's the point I want to make. So you know, you don't want to sell your soul. You just only want to do things that also. Otherwise, you don't really enjoy it, and then it's just people can tell. So anyway, um, but I might really start loving it because I fell in love with golf the moment I started doing it. Yeah. Just consult. I think we are. We have to wait for NQ as well. 3:40 is 10 more minutes. Let's see what happens in 10 minutes. 10 more minutes. We can wait. I mean, we don't mind 10 minutes, right? We can do that. We can do that. We're so patient. We are extremely patient. Are we already moving? Now, something that I noticed on the NQ. Um, Let me make sure that I say it correctly. Oh, we did actually. Okay. I actually do think that NQ is starting to make its way up now. Let's just see if I'm starting to frame a long though here. Um, why are you not? Yeah, I think it's getting more interesting now too. Let's see. It's 3:33. Love that time. Let's have a look. It's sort of like I'm because it's so, I don't want to say obvious, but like it wants to go for that higher time frame for that liquidity. But obviously, like we said, it could futz around quite a bit. But I sort of like don't want to miss that move if it happens in. But it could, take another few hours because we're just in that 4 hour candle, right? So now there's a very, very small. You see, this is a very small inversion on the 4 hour, but it is a valid one. So you don't want to see price go. So I'm sticking to the 4 hour. Why? Because it gives me a lot of information now. It's a little bit higher time frame, but this inversion, you don't want price to go. It cannot go below this. Let me go to the 1 hour on this one. So this is classical time distortion. Now you can frame another. You see, now it's a little bit different, right? So if you take this one here, let's say you take this one here on the 1 hour, you can do that as well. And you see the bodies are staying above the midline, right? Now you could also use this fair value gap here. So that will give you a lot of different. That gives you different information, right? Here, if you use this one, it gets a little bit more tricky, right? It's like, oh, are we going? If you use this one, you can frame a bearish trade already because you're looking like, oh my god, we are, is already disrespecting the bullish fair value gap. But if you add this one as use the inversion, it's a whole different story still, right? Because you still see the bodies are still above the midline. So even though it's working its way in this fair value gap, it's not disrespected yet. It's still valid, and as an inversion, it's actually still a bullish. It still has more bullish structure to me than bearish at the moment. Now it could go down all the way into this area, obviously. So we have nice long wicks as well, and we have a little gap here. So this price action gets a lot of people off guard because they're, it's just time distortion. It's getting people out of their positions on the long side, on the short side. I would really be surprised if it would go back into this breaker area. It could do it, but you really don't want to be in that price action if it does it. Now we have these wicks here again. Yeah, we have a little tiny imbalance still here. But we had a change in the state of delivery here already. It confirmed already bullish structure, right? It's clearly a change in state of delivery. This is balanced. This is. No, I'm still bullish. I can't. I could not frame a short here, to be honest. But if it does go down, I'm not in it because I don't like it. But let's check gold again. Let me check. I think gold is also still consolidating. This is consolidating. Um, it's just consolidating. Let's see, guys. Let's see. Maybe we should touch some grass and then come back later. What do you guys think? We come back for better price action. We start the stream maybe a little bit earlier, pre-market. Let's see if because it's 3:38 right now. Let's wait till 4 o'clock. 4 o'clock's my favorite time, and I use 4 o'clock throughout the whole day, especially in AM session. Now I don't know if gold. I'm gonna trail it as well with gold. If those times are just as valuable in the gold. Yeah, gold is just doing nothing, but I still have that mark that 3937-ish area. It's a very important area. And there's a weekly high, an old weekly high below that, and the weekly open as well. Yeah, 3937 is definitely, it might go there when we are off on where we're not on stream anymore, but hopefully it does it in the AM or in the New York Open. I think because I'm going to do more gold, I think it's good to start the session a little bit earlier. Because I used to do only lunch and PM, but now with gold analysis, I think it's important to include the AM session. So again, guys, if price hovers around midnight, it's not a good sign. And price keeps on going back and forth between midnight, as you can see here. You get price action like this. We've seen it kind of quite a bit this week, right? It's just hovering around midnight, going below it, above it, below it, and not really moving away from it. That is consolidation. And let me check if that's the same situation on GC as well. I thought midnight was also near, if I remember correctly. Let me check. Yeah, midnight. You see the same thing on gold, right? This is the gold one. You see the same thing. It goes below gold, above it, and now we're consolidating right around midnight area. So it's literally, I guess you can say that on NQ and gold, it's both consolidating around this midnight area. So then you just know, you know what? I'm either going to put an alarm somewhere and wait until it breaks out to one area or not, and then come back to trade it. But this is very typical, and it started. Let's see. So yeah, at 303 we went through it, and then we went low, and then it goes back into the range and stops around the midnight. There you have your. Then you know, okay, you know what? This will last maybe 1 or 2 hours. Yeah. So I guess both NQ and E and gold are consolidating. Let me one more check. I'll check NQ one more time, and I think if they're consolidating, I'm going to wait for 4 o'clock. That's what I said. I will do that. Let's see 4 o'clock. But you see how typical that is. The price action. So if you see that, put midnight on your charts, and if you see this price action, you already know. Okay, I'm in consolidation. I just have to wait. So NQ already gave us, a little bit earlier. We already knew that with NQ. Now gold was a little bit more clean until after 3 past 3, but we already saw this around here 239, and then it went back 247. So I think at that area already we were already sort of, knew about the consolidation. We already said that we didn't expect much of NQ. Because we've done our higher time frame analysis and we already know that it is on a mission to take out external liquidity, and it's just, the time is just not right yet to do so. So that's why it's just waiting and hovering around midnight. So that's something that you really want to start using. If you don't use midnight on your chart and midnight Eastern time and New York time, it gives you a lot of valuable information to sort of like predict the consolidation. Because that's a question that people ask. Well, how do you know if there's consolidation? Well, it's in this case two things, right? Your high time frame analysis, looking at the 4-hour chart, knowing that internal liquidity has been taken on that same time. You look at the same time frame, right? You cannot mix them up then. So on the 4-hour, we definitely took internal liquidity, and we are on our way to take external liquidity, and we're almost there, but we just are in consolidation before we do so. Look at this, guys, on the 5-minute. It's working on both sides. Oh, it's Friday, by the way. Yeah, it's Friday. So let me quickly do. I want to. Go on the daily here and mark the Monday was here, right? Monday was this one here. Monday, we had a Tuesday low. Okay, perfect. I like that. Monday, Tuesday low. I love Tuesday lows. Okay, now let's talk about TGIF. TGIF is just nothing different than a candle OHLC, a 20, 30, 40% retracement of every candle, right? Every candle has an open, high, low, and a close, as does the weekly. But why is the weekly? Why does ICT only talk about the weekly? I guess because it's on Friday and you have the end of a weekly candle. But you can also do it on the monthly candle. You can do a monthly TGIF. You can do a daily TGIF. It's just the concept. You can do a minute TGIF, 5 minute. It doesn't really matter. But because it's Friday, we use the Friday TGIF. But it's nothing to do with Friday. It's just a candle structure. And the end of the week that it finalizes its weekly objective. That's it. It's nothing special about it. So now what I look at is we are in the middle of the TGIF already, right? We were there already yesterday. So that's always, I'm a little bit cautious already if we are there and we're hovering around in that area a lot. So this is the 20% of the weekly range, 30%, 40%. Now, if we go out of that range and we go to the upside, obviously I have to extend the range because the weekly range becomes bigger, right? But you do want to see price action move away from it during London and let's say pre-market already. If you want a solid, if you are expecting a solid day and some movement, you do want to see it move away from it. I do like to see that it's like at the, it's not, it is getting to the top of the bodies and we have bullish structure. So I'm okay. I like what I'm seeing, but if we want to move deeper into this range and stay here a lot of the time, I would get really a little bit like, will Friday be an inside day and just, maybe it already hits it could have hit its weekly objective and just, stay in this area and be done and just hover around. Well, I mean, that would be really weird if it just, if it just would be here all day, it just, hover in this area. It's a little bit too little for me. But then again, it could only just, for example, take out a high a little bit and go back into the range and stay there. So that's why it's wise to have those levels on your chart on Friday to just gauge the, like, okay, are we in TGF? Because that means the weekly objective is done. Weekly objective just means that the candle, it hit its high and it goes back into the normal 20-30% range, and sometimes even 40%. Now, it could do some other things as well, but that's something, if it happens, I'll touch on to that. But a lot of the times, when it doesn't go into price discovery or it takes out another high, you will see that it will, it can stay. Sometimes it hits TGI up on a Thursday already. We actually did, but it doesn't have to mean that it doesn't give us a TGIF though. As long as it takes out a previous day high or weekly high or whatever, a high, yeah. So almost 10 more minutes. I'll just wait for the 4 o'clock and then I'll just let it be for now. Let's have a quick look at gold again. Now gold looks very, I mean, look at these equal highs here. Why are my times not working? Open range gap. Okay. So gold is now close the fair value gap. Let's see if it goes further up. I'm watching NQ on the higher time frame here. Macro starting now, 351. See, I like to see that NQ is moving away from this range, the 20% range. Now gold, I mean, these look too juicy to not to be taken, right? Okay, so I added my first presented fair value gaps on gold just to make sure that, and if I would have used them here, I didn't even have to put my fair value gap here. You see, this is a beautiful, this will be a good long. This is the first presented fair value of the midnight session, the midnight range, let me put it that way, and this is the first presented of the London, and look how beautifully it retested, and entry here, boom, and then take it. I would not take it all the way to the top here. I would maybe this, well, no, this is already rejecting here. Might be a nice entry. But I wasn't on the screen, but this would have been an entry for me here, 325, another one here, 340. And then we go back into this range. Deletes. Let's see, let me do a long. My stop will be go below this fair value gap because it's the first presented. And then I would do a 2R trade in the beginning. I would just go with very easy, low risk trades. So you get in and out and you take your money and run. But then again, if I would add time here, for example, I would add the macro. If I would see this, I could add the macro and maybe trade it till 4 o'clock. Then, but this is a solid entry from this area would be a solid entry, and then take it into this wick or into this because it could reject from here, right? But then again, with so many wicks here, it is on a mission to this area for sure. Now you can just play the macro. You can use time because the macro is running. You know, if you're in this area here and the macro is going, you're in extension. Look, you're in a market maker environment. This is a solid trade too here. But it has to reach this before in 3 minutes. Now the only thing is that if you would enter right, if that on that 1 minute you have to sit through consolidation. But if you know where things are going, that's fine. It doesn't matter. It's the same thing with this one here, right? If you trade NQ, it needs external liquidity, so it will hover around, and the moment it will leave this area, time is getting close for it to go up to the upside to grab that liquidity that is waiting to do so. $356, $356. $356. Thank you guys for hanging out and joining my stream. I really appreciate it. As a YouTuber, it's always very exciting to have people join and be interactive and give feedback, because that's what you need that to know what you can do to for people to or to give value to people. Now let's see. I mean, Google is pretty. I mean, I do like the. I'm just watching, and I really like the way it's running. To be honest, so I don't know, Anthony, if you're still here, but I mean, even in London, I think it's a good. This is a very solid setup. If I haven't been eagerly chasing it to trade it, but if I look at this setup, that is for me a structure that I would definitely play and how I would go at it. But look at this, it's running in the macro, and look if it hits my exact the TP that I framed. I know I can trust my analysis then a little bit more and start trading it a little bit sooner than I Um, let's see if it now it's 58. Now I would always be a little bit. I would be careful in this area. Why? Because the move already started before the macro. So then I'm always aware, like it doesn't need a full macro to reach a point because look, it's already in a wick, which is a rejection block. So sometimes it could be enough. So in this case, I would now, for example, if my TP would have been here, I might get out already, or I might get out when it hits this wick, if it's this area, because it didn't hit the daily open before my time. Um, only because the run already started before the macro. So then you see here what happens, right? This is the moment that a lot of people get caught by surprise. You see here exactly 358. So the macro was already done at 358. So let's calculate this price here. Let's see if it hit the 50% of this wick. Oh, it didn't even go into this wick. Look at that. Wow. Wow, you see that? That's interesting. That would have caught me, to be honest, a little bit. It used this wick here. No, it did not. It went over this one. Okay. That would have caught me a little bit. Well, I would have traded the time. I would have gotten out at three in this move to the downside, though. But anyway, okay. Okay, guys, look at NQ. It's finally going to, it's moving outside the area. And that's what I like to see. I'm going back to NQ. Um, now, it still looks a little bit bearish on here, right? But if I look at this one, it's moving away already. Even though it's a lot of down close candle, it's not fooling me. I'm very bullish on NQ. I think I'm getting into a long. Yeah, right below this area here. I think we're ready to move to the upside now. This might be a longer. There we go. Yeah, see. So that's kind of why that's why I'm so comfortable with NQ. Because I just sometimes what this little tricks is doing. Are we out of the blue? So this helps me. This information and the four because it's time. It's the time is starting to get is ready to make its. I'm entering on my other account as well now. I'm trailing my stop. Let's see if it goes out of this block now. Yeah, there we go. Let's see if it continues. See, I just love NQ. Okay, because we made such a large move, I'm going to break even on my other account as well. I'm already in a break even trade. I'm just taking the run up. So NQ, it was accumulation. The manipulation was a little bit hard to define though, but for me, as I said, when I use this also to gauge the behavior. So if it goes away from this area, you can tell it's ready to make its move to take out to grab the liquidity. It's on a mission now. It is really it's you'll see it's getting very aggressive now. Now the only thing, that it tricked us with this move. It could just also trick a little bit. I do think we're going upwards, but it could give us the same trick to the downside, to the upside for now. Yeah. Are you kidding me, NQ? You're so nasty. But look, it won't. Let's see if it doesn't go into this area again. uh, okay, NQ, you got me. You got me. That was a fit. I'm still bullish for the session. Don't get me wrong, but this is just seek and destroy. Yeah, it's just going back and forth. It did go into a fair value gap, right, to the upside, and then goes into the range back. It doesn't go back into this area here, but it's most likely will go back up again. But look at this, guys. You don't want to trade this. See, it's just everybody would have been stopped out now, right? If you have a proper stop loss, um, it's just stopping everyone out and still go up, most likely. But you don't want to trade this. Just be careful. I'm still confident it's going to make its move up, but look the way it's doing it. It's just wicking back and forth. It's taking out everyone, short, long. Um, you know, you see how it's going? It's ugly. Yeah. Yeah, I still have a long bias, but I don't want to trade this. This price action is really horrible, and it's just making it very hard for everyone to be in the markets. It's by design. It's very hostile. So yeah, let's leave NQ. And we were going to say NQ, you can go F yourself today now. For not for now. Well, yeah. Okay, guys, I think I'm going to touch some grass. I'm going to go to the beach. I don't want to. I don't want to spend time in this price section. I don't know about you guys, but um, yeah. Just be careful with this PA. Even though your bias might be right. Um, it's just really difficult to trade it properly without being stopped out or being taken out of your position and taking a loss for just nothing. So let me just check on gold one more time quickly, and then I'm going to leave it at here. Ooh, wow. Who said gold was dead? It's just a retreat. You see, it took out these equal highs here. Triple highs, actually. Yeah, beautiful. So you see, gold is actually the better thing to trade right now, right? And look at NQ going. It's just Yeah, nice. Gold. Gold is definitely now on my watch list, and look at that. I'm impressed with it. Okay. Okay, guys, I'll see you later. Um, Thank you for joining. I appreciate it, and I'll check in with you later again. Be safe. Be careful. Bye bye.